Elton's retirement journey. My name is John. I'd like to start this video off with a moment of silence for those who have lost their lives and are suffering due to this past weekend's hurricane. Welcome back. My name is John. I am 62 and I'm working and preparing for my retirement at 67. I got 5 more years to go. I've already picked out the best date for me, and it's going to help me uh, get myself prepared. And in this segment, I want to talk about record keeping and something that I ran into last week, which is something that I wanted to share with you, and it's called a worthless stock. So back in the early 90s, right around 92, I first started investing, and that was with a guy by the name of Terry Brenner. He worked with me at a computer store. He had got training and was a financial advisor over with Dean Witter, and he asked me to come in, and I went on in and I opened up an IRA and also opened up a mutual fund in telecommunication to save for a car, and that was in a regular taxable account. So as I got into that, I started reading all the material to come in. You get the prospectus, you get the proxy vote, and you get your statements and everything, and you can look over the statements and you write these checks. One check will go to the IRA, the other check will go into the uh, the mutual fund for telecommunication, and that was so that I could draw it out. I thought I was going to make some money, and lo and behold, that those accounts all broke even. They did not gain at all, but I kept investing, and eventually we moved on. But one of the things I started to do was start trying to save all those statements. I used to just save them in a folder, but I kept saving the same way because you will get your statements emailed to you to say your statements available. And I had been getting them hard copy. And what I've been doing is I have these binders here. We're up to about three of them now. One of them stored away. That was from way back in the 90s. But I got a couple here from since I've been down here in Georgia. This is the most recent one here, and this contains the statements I print out from my 401k. And mostly what I'm looking for is a 401k from December 31st from say 2023 as well as 2024 is how the 401k is growing. Specifically, my contributions. I want to track my contributions. I want to look at the change in value of the investment and see how I'm going and building year to year as I go into retirement. And so I keep these. These are up front. This one right here is with Morgan Stanley. Um, when I went in to see Terry, it was Dean Witter then, but Morgan Stanley had bought out Dean Witter as well as Smith Barney and Eaton Vance, I believe. They bought them out too. And they basically merged their wealth management and bring their clients over, is what they were doing. So um, these accounts now had kind of been moved, but I have all the statements here. And this is the Charles Schwab account. Now, one of the reasons why I have all these accounts is I like to spread things around. And at that time, as I was over the last, say, 10 years, I was investing in some investments. I pick them out of the 401k. And I would go to the Morningstar and I would read about the different mutual funds and I would pick them. And if they did really well, if it was a Charles Schwab or Fidelity fund, I would get them out of the 401k. I never kept the 401k. I didn't even know about the 55 rule. I have one now, but I'm 62. I don't have to worry about that. But if you were younger, you would probably want to seriously invest in your 401k because it does have the ability for you to get that money out of there as a hardship. But me, I would always move them and I have more control over them. But anyway, later in the late 90s, I got a brokerage, I'm sorry, it's an online trading account. It was a Ameritrade. And what I was doing was I was buying some individual stocks. And the stocks, pretty much, I guess the reason why I was doing it is because I didn't feel like the mutual funds were moving fast enough. I would get the statements and I would look at them and I would see the capital gains and I start to understand how they grow. I would look at the price of the value of the shares and I would track them in the paper and stuff like that. Back then, we used a lot of the stock. There was a whole page for the stock market back in the 90s and things like that before we started getting heavy into the internet. But I would always keep my statements. And probably one of the good things is to have those statements available is if you get cheated and there's a class action lawsuit, they're going to find you and send you some documents saying that we have a class action lawsuit, and they may ask you to prove that you had accounts with these people and you were actively uh, held shares and stuff like that. But the other thing is if your stock becomes completely worthless. So what I want to do is move into that, and I'm going to do a screen share, and we're going to take a look at worthless stock, and I'm going to tell you my story from last week. So we're going to hop into that shortly. Okay, folks, we're going to take a look at this trade confirmation. So I went ahead and bought this stock. I believe it was considered a penny stock because it's under $1 share. Its symbol is a leaf. Canadian-based uh, marijuana, medical marijuana company is what they're terming. Canada had already legalized marijuana and had these set up there, and so I thought it would be a good investment. And you can see I just put 270 bucks in it and commission of 495. Took 3 days to settle. So I bought this stock and it was at 90 cents. But after I bought it, it started sliding and it slid and slid. And I held on it for well over 5 years. If you look at 620 is the trade date. Um, and in my account, it was got down to 0.02, which turned out to be 2 cents, and that made it $4.11. Now, all of a sudden, a week or so ago, I was looking at my account and I was like, well, what happened to the symbol, first of all? Number two, what are these numbers and where are the shares? And so what I did was I called up my custodian, which is E Trade, and I had him look it over. And I did some research ahead of time, and I discovered that they had went bankrupt and they were being assets bought out by another company. But the stock had became completely worthless. As you can see, they went ahead and wrote it off, and I got this statement that I need with a settlement date to take a deduction on my taxes. So this is what I want to show you here, and it's part of the reason why the individual stocks can be so risky. This is not the first time this has happened. It happened with at least one or two other companies. And then I had a stock option from another company that I talk about in my wage suppression. I was employed with them, and they gave me a 200 share, and you'd always have these restrictions on it. Well, I have documentation said the restrictions were lifted, but they never, in fact, did, and the brokerage house could not sell those. They actually returned a whole certificate to me saying you have 200 shares, but they're worthless. So what I have to do is write that company and see about how I can get those restrictions lifted. And I may solicit this as a question to Rob Berger. He's one of the wrote for Forbes magazine, and he's a lawyer on one of his channels on a Q&A and see what he has to say. But I'm sure I should just write Guardian Industry. That's the parent company. So I just wanted to bring this up. And this is important of you keeping track of your trades if you're dealing with individual stocks and your mutual funds and stuff. And like I said, this is the other book here. This one's really, really heavy. Um, and this contains, if I open it up, it goes straight to Fidelity. And it's September 30th, 2017, $17,181 in it. I got that count up to $105,000 since 2017 by rolling over accounts from employer. You leave an employer, I never leave the 401ks. If I was younger at 55, I might in case of a hardship. But now at 62, no, I get them out of there because they have fees and they don't always disclose the capital gains. And I track capital gains because I think it's the number one piece other than you adding to these accounts and the share value going up. The reinvestment of capital gains is very important. It helps you get more shares in it. They do go down a little bit in value when they pay out, but I've gotten $4,500 out of a couple of my old uh, mutual funds, and that's a nice little bit of money if you start combining dozens and dozens of mutual funds that pay out capital gains in retirement. It almost can um, bring you enough money like an annuity. But this is my presentation on the record keeping. You can either do it like this or do it in your PDF, save them. Very important, especially if you're married, because you ever have a divorce, sometimes these brokerage houses, they only keep these around for so long. You might have to pay them to go pull that out of archive, you know. So this is my presentation, record keeping and worthless stock. My name is John, and this is Elton's retirement journey.